All right, guys, welcome to another episode of Systematic Investing. Today, we're going to be talking about one of my favorite investments, SoFi Technologies. And just as a reminder, the information provided in this video is for educational and entertainment purposes only. I'm not a licensed financial advisor, and this content should not be considered financial or investment advice. Always do your own research and consult with a licensed financial professional before making any investment decisions. All investments involve risk, and past performance is not indicative of future results. All right, so SoFi Technologies. Do we think this is a generational opportunity or just some hype stock? Spoiler alert, SoFi absolutely rocks, and let's get into why I think so. So first off, continuous innovation and brand building. So here's kind of a timeline. They have their three sectors of their business. They have lending up top, financial services, and then tech platform. So in 2012, as you see, they started their lending business way before anything else. So they had student loan refinancing, and then they had mortgages, then they had personal loans. 2019, they came out with in-school loans, opening a market to current students. And then in 2023, they got Win and Mortgage, strengthening home loan technology and fulfillment capabilities. And then they launched home equity loans in 2024. But the financial services is going to be the big thing for them. Obviously, lending, their bank, so lending is kind of a big deal. But financial services is the highest margin and offers the most growth potential for them at this point. So in 2019, they launched SoFi Money's Relay, and then Invest and Protect, which is all great stuff for them. And in 2020, they got the credit card. 2021, they launched Lantern Credit to match users with lending partners. So that's like their lending platform business. So say you want to get a loan, you go through SoFi, and SoFi can use other people's money to loan through SoFi, if that makes sense. So somebody else runs the capital, SoFi services loans, they originate the loan, and that's big for them because they don't have to get more deposits in order to make those loans. So in 2024, you see they expand loan platform business with $2 billion deal with Fortress. They got mutual funds and alternative investments, and they got SMB financing marketplace, and then they launched a paid SoFi Plus subscription this year. So I mean, these whole things as they're doing the financial services is going to help them with their margins big time, and it kind of gets their lifetime value of their customers up because now they have somebody who got a loan with SoFi. Oh, I like SoFi a lot. Let me get a checking account. Let me get a credit card. Let me start investing through SoFi. So they have all these ways they can increase lifetime value for customers. And then down here at the bottom, we have the tech platform, which is more or less a way that they help banks. Say you want to lend out money as a bank, you go through SoFi to help you actually be able to manage your banking online and then actually, originate loans online, things like that. So that's not a huge business for them, but it's good to have. It's definitely helps diversify the revenue stream and it has high margins. That helps. And then over here on the left, we have I say SoFi is a strong, trusted brand. So they have SoFi Stadium, which is the LA Rams and Charger Stadium. They have the tech-infused golf league that's presented by SoFi. And then they're also the official banking partner of the NBA, the G League, NBA 2K League, and USA Basketball. And they're the presenting partner of the Country Music Association CMA Fest, the first ever music partnership for SoFi. So all those are big deals. As a 15 billion market cap company, I mean, those are huge partnerships, the NBA and SoFi Stadium in particular. All right, now we have the one-stop shop for digital financial services. So as we mentioned before, increasing lifetime value for customers. So you have member, you have your different page where you show everything. Then they have banking, credit card, invest, loans, and then SoFi Plus uh, increases your tier benefits for all those different things. So you get like, I don't know, say better percentage on your loans, on your checking accounts, on your savings accounts, better credit card rewards, maybe things like that. And that, I mean, that helps increase lifetime value for customers once again, because in the banking industry, it's just all about how many people can you get, how much money can you get per person. So SoFi is expanding their offering in order to get that lifetime value up at the same time that they're attracting more and more and more members every year. And then here we just mentioned more members every year. We're kind of getting, I mean, we're doing really good 2021, 2022, 51%, 44%, 34%, and 34% again, counting Q1 24 to Q1 25. And I mean, now that's 800,000 to 802,000 new members just in the first quarter and a 52% CAGR. And then in products is, is how many people, I mean, yeah, that's pretty self-explanatory, but 53%, 41%, 32%, and then a reacceleration of 35%. So they're not slowing down at all because now that they're coming out with more products, they're able to sell more per person. As in 2021, 2022, they had a lot less things to sell to their customers. And then strong returns, obviously, SoFi is a profitable company. Adjusted earnings per share in 2021, I mean, they were losing so much money. When I started investing in SoFi, I almost completely speculated. I mean, I just saw going from $1 a share loss to 40-cent share loss, and then over here to 10-cent share loss. I started to gain confidence that SoFi had what it takes to get to gap income profitable. So once they did in 2024, that's when I started really buying a lot of SoFi around the $7 range. And then obviously now for 2025, we're predicting almost double our earnings per share from last year. And then book value obviously has done really good over the last few years. They stopped in 2022 and three when we had that little like rolling recession, you could call it. They stopped making as many loans and taking as many customers because they were kind of concerned about the credit situation with some of the bank failures we had in March 2023 and things like that. But ever since then, we restabilized and they've really gone after it to go get more customers, go make more loans. So that's good for them. And then they have a return on total capital employed over here. And obviously they've done really good. They went from deeply negative to 5.8% positive. So that's huge and still increasing. We just love to see it. And then guidance. This is where SoFi just rocks, guys. Like, so over here on the left column, you see what they did in 2024. This is their 2025 guidance. So low of 24% growth, high of 27%, and then adjusted EBITDA margin of 27%. Super good. Over 26 last year. And then net income 9% last year. They're saying about 9% this year, which I don't exactly love. I'd like to see it grow, but it's not terrible. It's still positive, and 9% is not bad at all for a bank. And then diluted EPS going up to 27 and 28 cents. And over here on the right, this is my favorite part about them. Over on the right, before this quarter, this is Q1 2025. For Q4 24, they said 23 to 26% versus 24 to 27 now, 26% adjusted EBITDA versus 27 now, and then they said 9% versus 9%. But even though on that 9%, you can see it's 285 to 305 versus 320 to 330, so it's almost 10% better. I mean, it's pretty awesome, pretty big. And then I mean, all four of these are better than last quarter, and honestly, they seem to just somehow find a way to do this every quarter. It's downright amazing, and I love it. So then over here on business expectations, they have member growth of at least 2.8 million or 28% from last year. Um, Adjusted EBITDA margin of 30% in line with our long-term investment philosophy. And then uh, lending growth of low double digits to teens, and then financial services adjusted net revenue growth of 60 to 65%. See, that's what I like about that financial services business. High margins, fast growth. They can sell to their existing customers, they can sell to new customers. The whole space is growing, more people are getting into investing. That is going to be huge for SoFi going forward. I mean, 60 to 65%, that's really what is driving what's going on with them. And then asset growth of single digit billions and tech platform adjusted net revenue growth of low double digits to teens. So you can see the tech business and the lending business are like 10 to 15% revenue drivers, but the financial services they're just exploding 60, 65%. That is just massive for SoFi. And so now we're going to do a little valuation. So here I got my base case. Um, with our base case, I'm going to assume they hit the upper end of their 2025 adjusted revenue growth. So I'm going to go back here. So 2027 or 27, sorry, 27%. SoFi, as we just mentioned, they always beat. Like, I don't know how they do it, but they always beat. So I'm going to put my base right at the top of the expectation range. So we're going to go 27% and then 24, 23, 22, 21, 20, 20. So, as they get bigger, it's going to be harder to grow revenue. So I'm going to assume they slowly decline revenue growth over time. And then we're going to go with net income margin of 24%. We have 5 years to continue expanding growth. We're at 27% adjusted EBITDA. And as we get more financial services, less lending, I mean, that's just going to only help expand margins for them. And then we're going to go, because their adjusted EBITDA is pushing 30. So I assume their GAAP EPS margin can get to about 24%, which seems reasonable to me. And then forward P multiple of 30, price to sales of 7, and then shares outstanding, a very slight growth from where they are today, but that's pretty close to where they are now. I'm assuming no buybacks, not a bunch of share dilution. And then that gives us target price in 4 years of 67. Sorry, I should say 2030. Oh well. But 2030 of 66 and 2025 of about 17.3. So that's roughly where we're trading at right now. So according to my base case, we're pretty fairly valued at the moment, assuming we want 25%, which is double the S&P 500 every year for the next 5, which is awesome. I could totally ride with that. And then our bear case. So in the bear case, I'm going to assume the lower end of their 2025 guidance, and then 21, 19, 18, 17, 15, 15, assuming a pretty steep drop off in how they can expand revenue over time. And then we're going to assume net income margin of 21. I mean, the thing about SoFi with my bear case, it's hard because I have such a deep belief in this company because of what I've seen them do over the last 4 years. I saw them go from bank, a quote unquote bank who didn't even have a bank charter, losing a bunch of money every year. And now they have a bank charter. Their names on SoFi Stadium. They're official part of the NBA. They're growing members like crazy. They're becoming kind of big time now. They're expanding margins. Like they're kicking ass in every single metric possible. So I'm going to go with 21%. I'm going to go with forward PE of 24, which even for 15% growth is kind of low. And then price of sales of 5.5. I'm assuming the same for shares outstanding. And then we have 39 price target in 5 years in 2030, and then $10.20 right now. So I would assume we're about 40% overvalued, which honestly isn't that bad considering it's been on such a run recently. And then for our bull case, I mean, this is if you're a bull, you love to see something like this. So I assume, as they've done almost every quarter, they beat expectations once again, 30% revenue growth in 29, 28, 28, 27, 26, 25. So I'm assuming from now until 2031, they can continue to beat expectations. And then net income margin of 28%, which is pretty bold, but I honestly think there's a fair chance they can do it. And then forward PE of 35, price of sales of 9, and then we're rocking the same thing with the shares outstanding, discount rate 25, and then that gives us price target of 2030 of $117 and a price target right now of $30.6. So I mean, that's pretty badass. I've been saying SoFi is a $100 stock in the next 5 to 10 years. And I mean, that's the math. This is what they have to do in order to achieve that. I think they can totally do it. Anthony Noto and team, I mean, to say the least, they're a bunch of ass kickers. They win every time. They just find a way to get it done. Their management's excellent. I mean, the product's excellent. They just find a way to do it, guys. And that's at the end of the day, that's really what you look for in a company is you want to see them every quarter. You say, "Wow, that's impressive. How did they do that?" But they just find a way. So SoFi to me, I'd go somewhere. I'd peg my fair value about right where it is right now, about 18 bucks based on my base case. I'd stick with my base case. I think that's definitely the best one to go off of. So in terms of my exact plan, anything under about 12 bucks, I'm a cheap bastard. Anything about 12 bucks, I'm going to be buying very heavily. Over 12 bucks, might DCA here and there. But yeah. So yeah, conclusion, huge winner long term. The financial services with that 60 to 65% growth, high margins. They have a bunch of young professionals, kind of like tech workers out in California, as a lot of their client base. They've already been gaining big time brand recognition, continually expanding services to, like we said, lifetime value for customers. They have tons of room for growth. They can get into insurance. They can get into all sorts of different things. And then time and time again, as we mentioned a bunch of times, they beat expectations somehow every time. It's just super impressive. So I love SoFi, bullish SoFi. I continue to ride. I'm riding SoFi long term. I probably won't sell for a decade or two. So we're going to see how it goes. And that's it for today, guys. Um, thank you for watching Systematic Investing. Please leave a like, comment, subscribe. If you like anything with the video or don't like anything with the video, just let me know. I'll try to make my videos better for you guys, try to make them easier to understand. If there's some sort of subject you want me to cover in the next one, throw it in there and I'll make a video about it for you guys. So have a blessed day, y'all. Systematic Investing out. Peace.